The tax payable on total income is the difference between 8A and 8B. Subtract the amount in box 8B from the amount in the box 8A and put the result in box 9A. If your total income is more than rupees 10 lakhs for the year, then calculate 10% of the amount in box 9A and put it in box 9B. This is the surcharge on income tax. For the 10 lakh limit, you have to consider your income after deductions. This is the amount in box 5. Add the amounts in boxes 9A and 9B and calculate 3% of this amount. This is the education cess. Put it in box 9C. Now, add the amounts in boxes 9A, 9B and 9C and put it in the box numbered 9D. The relief under section 89 is available when salary is paid in arrears or in advance. If this is the case with you, indicate this amount in box 10. This should not be applicable in most cases though. The relief under sections 90 and 91 is the relief regarding double taxation. Again, this should not be applicable in most cases. If you feel this is applicable to you and you need to fill this amount, I suggest that you consult a chartered accountant. Subtract the amounts in boxes 10 and 11 from the amount in box 9D and put the result in box 12. This is the balance tax payable. This is where you would put it in the form. Now we come to the section where we calculate any interest payable. The interest under section 234A is the interest payable if you are filing your return after the due date. This is calculated at 1.5% of the tax payable for every month or partial month of delay. If you need to pay interest for this reason, indicate the relevant amount in box 13A. The interest under section 234B is the interest payable if you have not paid 90% or more of the expected advance tax amount by 31st March of the year. This is calculated at 1.5% of the advance tax shortfall for every month or partial month of delay. If you need to pay an interest for this reason, indicate the relevant amount in box 13B. You are expected to pay income tax as and when you earn any income. The interest under section 234C is the interest payable if you have not paid the expected advance tax amount by the required dates, which are 15th September, 15th December and 15th March. It is calculated at 1.5% of the advance tax shortfall for every month or partial month of delay. If you need to pay an interest for this reason, indicate the relevant amount in box 13C. Add the amounts from boxes 13A, 13B and 13C and put it in box 13B. This is the total interest. Add the amounts from box 12 and box 13D and put it in box 14. This is your total income tax liability for the year, and this is the amount payable by you to the Department of Income Tax. Now we come to the section where we mention the taxes already paid by us. If you have paid any advance tax, put the amount in box 15A. Add up the tax deducted at source or TDS for all your income and put it in box 15B. This means that you have to add up your TDS from different form 16s and from 16As and put it here. When you anticipate that the tax deducted at source and advance tax paid by you is not sufficient to meet your income tax liability, you pay the anticipated difference as self-assessment tax at the end of the financial year. If you have paid any self-assessment tax, put it in box 15C. Add up the amounts from boxes 15A, 15B and 15C and put it in box 15B. This gives us the total taxes paid by you during the year. If the tax payable is more than the tax you have already paid, you would need to pay the difference now. This would be the case if the amount in box 14 is greater than the amount in box 15D. If so, subtract the amount in box 15D from the amount in box 14. This is the amount that you need to pay now. Put this in box 16. this is the tax payable. But if the tax payable is less than the tax you have already paid, you would get back the extra amount that you have paid as a refund. This would be the case if the amount in box 14 is less than the amount in box 15D. If this is the case, subtract the amount in box 14 from the amount in box 15D. This is the amount of refund that you would receive from the Department of Income Tax. Put this in box 17. If you are eligible for a refund, put your bank account number in box 18. Remember, your bank account number is compulsory if you are claiming a refund. You can get your refund in two ways. It can be directly deposited in your bank account, or a check can be sent to you by post. Choose the method that you want in box 19. I would suggest direct deposit in the bank account, as that is much faster. If you choose direct deposit, you need to provide the MICA code of your bank branch. You can find this 9-digit code on any of your check leaves. Also indicate the type of bank account that you have. It would be savings or current. Now we come to the details of tax deducted at source, or TDS. In box 21, you give the details of the TDS on your salary. You can get all the details from the Form 16 issued to you by your employer. If you have more than one Form 16, fill up the details in separate rows. Let's move on to the next page. In box 22, you give the details of the TDS on the interest earned by you. You can get all the details from the Form 16A issued by the TDS deductors, which are banks in most cases. If you have more than one Form 16A, fill up the details in separate rows. Now, in box 23, give the details of any advance tax and self-assessment tax that you may have paid. You can get all these details from the receipts that you received when you filed these taxes. If there are any transactions that need to be reported to the Annual Information Return, or AIR, mention them in box 24. These include high value transactions like depositing a total of more than 10 lakh rupees in a savings account in a year, purchase of a house for more than rupees 30 lakh, credit card bills for the year being more than rupees 2 lakhs, etc. If you have any interest income which is exempt from income tax, mention it in box 25. For example, interest on RBI's 7% or 8% relief bonds, or interest on gold deposit bonds should be included here. This is only for the information of the income tax officer. There is no tax on this. In the end, put your name and your father's name, place and date, and sign the return form. Remember, even married women have to put their father's name and not their husband's name. Box 26 is applicable only if the return has been prepared by a tax return preparer, or a TRP. If you are watching this video, in all likelihood, your return would not be prepared by a TRP. If it is indeed prepared by a TRP, these details would be filled by him or her. That's it. Your ITR1 form has been completely filled up. Although it seems complicated, it's quite simple, isn't it? Thank you for watching this video, and happy tax filing. Please visit www.ragvamdat.com for lots of useful information on personal finance and investment planning. Thank you.